Hey, good afternoon, everybody. Going to go over our Forex trades for today, Wednesday, January 25th, and also Tuesday, January 24th. We had 3 correlation trades, or 6 different pairs. Dollar yen correlated with euro yen. Aussie dollar was the trade, which was correlated with Kiwi dollar. And then pound dollar was the trade, which we correlated with pound Canadian dollar. We consider them correlation scalps because instead of just taking a pure scalp, we offset the risk by correlating it with a pair that it is highly correlated with. For several reasons, it gives the trade time to work out. Don't have to set such tight risk parameters as you would with a full scalp. Could profit in several different ways. Really, the only way you're going to get stopped out is if you're dead wrong and it completely goes and continually goes against you. And then eventually hits your risk, your stop loss. So we'll go over them in a second. First, the economic news from the last couple of days. There really wasn't a lot. December existing home sales plunged the most since 2009. They missed horribly. They came in at a negative 2.8%, so not very good there. U.S. January market manufacturing PMI beat, but barely, but it did beat, so that's one good sign there. Caterpillar, we like to point out Caterpillar, they have posted their record 49th, get that, it's a record 49th consecutive months of declining retail sales. We'd like to point out Caterpillar just because it's been around for a long time. It's a great barometer of the U.S. economy. Especially farming and agriculture and whatnot. The previous administration, as well as the Fed, telling us how great the economy is, how strong the economy is. Caterpillar has never had 49 consecutive months of declining retail sales. If the economy was as good, it's just more proof that the administration and the Fed is not telling us accurate information about the economy. Caterpillar certainly would not be posting 49 consecutive months of retail sales if the economy was as robust as they are telling us. So let's get to the trades. First trade you see here is a short in dollar yen from 113.615. We had 40% of normal size. Covered it. It really didn't do a whole lot, and then finally started to come in. Covered it 113.149, picking up size adjusted 18.6 pips, or non-size adjusted 46.6. Euro yen, we were at the same time long from 122.080, and you can see obviously it did follow suit. We had 20% of our normal size, or half of what we had in dollar yen. We sold 121.432. Losing 35.2 pips, or size adjusted 7.1 pips. Aussie dollar was the call here. Wasn't crazy about it just because it's up near the figure of 76 even. As you know from watching previous videos, figures 76, 75 even, 77 even. They're psychological levels. So it wasn't crazy about it because we're going long at 0.75816. It did pop within a couple hours. We were up 10.7 pips, so we took it. We had 60% of normal size. Aussie dollar is not as volatile as dollar yen, so we had bigger size. So we took the 10.7 pips, or size adjusted 6.4. We had it correlated with a short of Kiwi dollar from 0.72349, and it didn't pop quite as strong, so we were only down 2.9 pips on that when we covered, or size adjusted 0.9 pips. Now, pound dollar is more volatile than dollar yen, so we really don't trade pound dollar, pound yen, pound whatever very often. So we took a 20% trade, 20% normal size trade. The signal was go long 1.25173. You can see it's in a short-term uptrend and a long-term downtrend. So that was another reason we weren't crazy about it. And also, we correlated it with pound Canadian dollar, which it's correlated, but nowhere near as highly correlated as these previous two, the Aussie dollar, Kiwi dollar, and dollar yen, euro yen. So with all that said, we took 20% of our normal size for 1.25173. That was last night. This morning come in and it's up beautifully. It's up 70.5 pips. So we sold at 1.25878, or picking up 70.5 pips, or size adjusted 14.1 pips because we had 20% of normal size. Pound Canadian, we had 10% of normal size, half of what we did in pound dollar, and we were short from 1.64417. Pound Canadian is actually more volatile than pound dollar. So if we were wrong on pound dollar, it's very likely that pound Canadian dollar, we could have actually made money on the trade. But as it turned out, it did follow suit that the pound dollar did, and it went against us to the tune of 73.1 pips. So we covered at 1.65148, losing 73.1 pips, or size adjusted 7.3, as we had 10% of normal size compared to 20% of normal size for pound dollar. So in the end, yesterday we were up 17 pips on the button, and today we're up 6.8 pips, everything size adjusted. So that's it. We'll take it and we'll move on. I'm going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way, and we'll be back tomorrow. Soon we get some action tonight, tomorrow morning. Have a great rest of your day.